Hey everybody, Boris, that's BK Forex. Welcome to the commodity dollars for Aussie dollar, dollar CAD, Kiwi dollar, December 11th, December 15th, 2017. And the story in the calm dollar land this week is all about relative strength, relative weakness, I think. It's really a big story, essentially, in my opinion, of Kiwi leading the front on the relative strength basis, following by Aussie and CAD. And I'll explain to you why I think so. Let's take a look at the levels first before we get into the news and everything else. On the Aussie side, we slipped a little bit lower. 76 to 74 now is the new range. 74 is the key support. CAD, we moved up definitely post very, very dovish commentary from the Bank of Canada, which completely flipped around last week's positive news data. And I think that's really a much more material driver for why dollar CAD seems to be the weakest of all the commodity pairs. So now we're 27, 29, with that 29 being a very, very key breakout level for dollar CAD we should be watching as we go forward. And basically, Kiwi staying stronger, not because it's really moving up, but because it's not just now moving down. It seems to be a high hold here in the 68s. It tested the 67 twice. That seems to be very solid support. And barring any unexpected news, because we don't have anything on the calendar, seems to be the lowest vol trade, which is really the key story here. Is the lowest vol trade that makes it the strongest of the bunch. Looking at the calendar, there's really only Australian employment as the key metric that we have on the calm dollar land. It comes in on Wednesday, which is Thursday to you guys. What's fascinating, though, is that this is always interesting, is that you have this incredibly schizophrenic dynamic, because typically Australian employment always follows the same night that the Fed makes a rate decision. You have this tremendous amount of vol late New York afternoon, which almost never happens. And then after that, you could have completely different vol in Australia. It's very idiosyncratic to the data. We're actually bullish. The odd data, both, although level 2 it's a yellow color, meaning it's not as strong as our other positions, and that suggests mildly positive skew to the Aussie into the employment. But of course, all of it is going to be very much second fiddle to the fact of what the Fed is going to do. If the Fed comes in uber hawkish and rate differentials start to really compress, the Aussie is naturally going to start to bleed away because of the carry moves. Other than that, there literally is nothing on the calendar on the calm dollar land. I don't even see there's any CAD data that's of any import. So we are all essentially focused on Aussie as the only calm dollar trade. And ultimately, to me, it's less going to be about, of course, the economic data on the calm dollar land, but much more about the relative strength, relative weakness of each one of the currencies. Oil slipping a little bit here. We seem to be having a hard time with the 60 level. If oil starts to just drift back a little bit, that adds to the idea that dollar CAD becomes a much more vulnerable trade as we go forward. So looking at the calm dollars, we might as well start with, actually, I think I want to start with the Aussie first. So Aussie is approaching this very key 75 level. We did close on the lows of the day, not a good sign. This is a pretty decent support here. Former high has now become current support right around the 75. But really, it's the 75, 74 zone into which Aussie is probing. And we have to see just how strong the labor data is. None of the data out of Australia, except we did have one positive data this week, which was the retail sales actually flipped around to the upside. But they were followed by weak GDP numbers, and a lot of the early week enthusiasm completely got unwound, as it seems to be pretty significant evidence here that the glory days of Australian economy seem to be behind, in a sense that the big Chinese boom and then the recycling of the Chinese boom into the real estate market seems to be very much at the tail end, and there's kind of a secular contraction going on here in the economy, and the RBA is just simply trying to plug the holes in a leaky boat. So hard to get too excited about the positive skew here, but we may have a temporary kind of a hold here around the 74 just on a technical basis. I'm not the most negative on Aussie. I am most negative on CAD, because if you look at dollar CAD here, this particular flip off of the very, very strong 200-point move on labor data, followed by a very, very dovish Bank of Canada saying we don't really care what data says, we're not going to raise rates anytime in the near future. The reason why all of this plays out to me with great importance is if the Fed then comes in and says, yeah, we are going to raise rates, and we're going to push rates maybe 3-4 cycles into 2018. The natural North American spread, the natural proximity, is going to put capital away from loonie into the dollar as interest rate differentials begin to really weigh. And I think that becomes a big danger point for a breakout level here. We're going to be watching this 29 level, very key. Remember, a takeout of the 29, a move towards the 30 is a major breakout. Matter of fact, I think we haven't been there since middle of the week, or middle of the year, right? And that creates that whole relative weakness trade in Canadian dollar, a big power move in dollar CAD. So be watching that very carefully. If the price confirms my thesis, if we do get the big breakout towards the 130, that certainly puts the dollar CAD as the least strongest or the weakest of the commodity dollar currencies. And Kiwi just holding bid. It's just doing nothing. I mean, it's very much following what the Aussie's doing, but in a much tighter, slower, less intense way. And that simply is what's providing it with a little bit of more strength. This 67, was that 67.80? I guess that's 67. Yeah, 67.80. I thought it was a deeper. I guess it never penetrated 67.50. The 67.80 still pretty much operates as the reference point for support for the pair. It's not that the Kiwi looks extraordinarily strong. It just simply doesn't look nearly as weak, just on a compression basis. It just seems like it just doesn't want to go anywhere. And if it basically holds bid here mildly, there is a possibility. There's no doubt about it. There's a possibility here that if the Fed communicates a strong hawkish message, we'll break this low. We may go to 67.50, but on a relative basis, like a 100-point move in the Kiwi will be accompanied by a 200-point move in a dollar CAD, and perhaps a 110-point move in Aussie dollar. And that's really all I'm saying. So if I'm ranking my currencies on the COM dollar land from strongest to weakest, it basically becomes Kiwi, Aussie, CAD in that order, or weakest to strongest, CAD, Aussie, Kiwi. Wish you guys the best luck, the best trading. Boris Schlossberg, over now.